What's up, everyone? Welcome back. Second video in the technical section. In the last video, we covered the 4 stages and kind of why they happen, just a light touch on that. In this video, we're going to go over ranges and how they play into this because this is core to what we do. Range is one of the first main concepts that we use. So over here on the left, you see in the last video we talked about we had this uptrend right here, which had higher highs and higher lows. Okay. So within that, those higher highs and higher lows are ranges. Okay, so here you see we had this high, then this low, and then we broke above the high, forming that higher high. Okay, so that's what a lot of the smart money space is going to consider a break of structure. I fucking hate that term because I think it's garbage and it's been overused, kind of. They're trying to apply it to certain ranges and not all ranges, and then they don't have an explanation for why it doesn't apply to the other ranges, but in reality, it is how every range does print. So I'm going to try and simplify it and teach it a little bit different. So here we have this break to the top side, printing in this new high, and then this low. Okay? So within that, we can obtain multiple things from our ranges, but essentially what we're using them for, the purpose for them, write this down, is to tell us where we are in the market, what price is likely to do next, which gives us our bias, our directional bias, give us an invalidation point where if price breaks under that area, not necessarily trades at that area or even trades under it, but breaks under it. We'll get into that later on in the education, but essentially an area that you know you're basically wrong about your bias. As well as that, we get a target being this high here because we're under the assumption that as price pulls back here, forming in this higher low, which is where we look to get involved, we're targeting this high under the assumption that price likely, if this uptrend is to continue, should break to the top side and potentially trade even farther above that initial target. That is where we have a lot of other concepts that we'll use and get down in the future. But for now, I just want you to know basics of a range is it gives you a target, it gives you an invalidation point based on the prior range that was confirmed. That confirmation of the range comes from it being broken. It gives you an area to look to get involved. And yeah, I think that's pretty much all I want to go over for that here, but I do want to give you a quick real example of it. Oops. So let's go up here. This is gold. So you can see here, 4 stages of the market we were talking about, pretty clear. So here we had this low, an accumulation, an uptrend, a distribution, and then a downtrend into an accumulation. Now, within this, we're just going to use this example right here. As we came up and we distributed up into our top, we printed this low. Okay? So this low was caused by, actually just make it more simple, we use this low. So this low was caused by this high within this uptrend. High, low, higher high, higher low, higher high. Now we're under the assumption that price, as it will pull back, will essentially come into here and reverse, go topside targeting here, and then potentially even higher. See here, that obviously didn't happen, but every time in the past, so from the low, as we broke to the top side, higher high, higher low, 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 higher high, boom, fails, immediately trading through it with volume. Okay? So you can see here how every single time this concept applied until the top was in. So essentially, our goal is to be right about this move, this move, this move, this move, and this move until we are proven wrong, which happened right here with that break. So with this break, we could immediately assume, okay, price is likely to now flip bearish. Now notice, as price broke down, forming a lower low under here, coming in, printing this low, boom, 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 boom. I'm going to draw out this trend for you so you can relate it to the 4 stages that I was showing you earlier. You can already see how powerful this can be. We haven't even touched on it at all, I promise you. It gets so much deeper than this, but this was just kind of a basic explanation for what we gather from a range. So as it breaks down here, we immediately get an invalidation point. We get our low print. Here, which is our target, and then we get this pullback into this prior range. So low, high, new low, lower low, pullback, giving us our target, our invalidation point, an area that we'd like to see price pull up into, and then a continuation in our bias direction. So that's the basics of a range, and I just want to quickly go over that, and we will dive deeper into this in the next videos. But yeah, that's pretty much it for this one.